to access capital markets, gain knowledge in capital markets, and educate themselves both through technology and connecting with others around investing in capital markets. Stock markets, crypto markets, commodities markets, it's all a part of the large capital markets.
So also design, you didn't think about that actually. Instead, it's important, I think, because okay, retail investors might be incentivized to enter the market thanks to something which is simple to understand. And also this is the design of the platform you're speaking about.
Simplicity and innovation were always the key values of eToro since we started. How can we make sure that investing is innovative? We use technology to innovate, and we make it simple so people have access to the markets and obviously to investing and copying our top investors on the platform.
Okay, so you started back in 2007, is it right? Yeah. So at the beginning, I think it wasn't easy. So and then you had a long path. What did you do when you encountered some obstacles, and what did you decide, and you tell yourself to go on and stick to the project?
I think for every entrepreneur, probably one of the most important things is setting up the vision of the company and believing in your path forward in a way that's almost irrational. And I think that part enables you to constantly sort of be extremely persistent in trying to achieve what you want to achieve. And every time there's a problem in the market, they throw you out of the window. So you get in through another door or through another window. So I think we've had a lot of, as every startup, a lot of challenges. We started in 2007, and then 2008 came. And in the 2008, it was a lot of aha moments, because in 2008, we raised money from investors. Our money was in several banks, and then I had investors calling me and telling me, which banks did you put the money of the investment, because you need to figure out that tomorrow morning those banks might not be open. And in fintech, right? So a fintech entrepreneur raises money, has money also of clients, and then you realize, okay, the money in your banks is not really safe, and you need to sort of diversify it. We've went through a lot of these ups and downs. And we raised, I think, in 2007, $1.7 million at a $5 million valuation, all the way to last year closing $250 million raise at $3.5 billion. So I think it's always my understanding that there's no question about our vision and our mission, right? So I know we want to help people become more successful investors. I know even me personally, I want to improve as a successful investor. I want to be better at investing. So I'm constantly actually building tools in eToro for myself, because I want to use the platform. I want to invest. I want more access to knowledge and to investments. So once as an entrepreneur, you understand that it's inevitable that what you're building has value for your users and come from the thinking of, I'm actually a user, then you can sort of come over a lot of these challenges. And one thing I'll always say that we were good at is also managing our own financials, right? So I think a part of sort of key parts of me as an investor in general, as investors, we understand financials because we know and understand how to read financial reports. And I've seen a lot of startups along the way that simply didn't properly manage how much money they have and manage growth responsibly. And I think we've always sort of, while we spent a lot of money on growth, we've always managed to know that we have enough money for the next 18 months and did that responsibly, whether it's opening new markets, which sometimes new markets required huge amounts of investment, or new products. We always sort of managed it to a point in a very responsible way.
Thanks. As a teacher, maybe you had Warren Buffett, because I was told that you had an interesting dinner with him. So what did you learn from him?
I think for me, the most important, first of all, it was really an amazing experience for me to meet Warren Buffett.
Imagine.
Amazing experience. And what was very interesting is I've read his books and I saw a lot of his comments before meeting him. And what was interesting is I realized when he spoke and when we asked him questions, he was very, very consistent. Like I almost knew for every question asked, I knew what he was going to say. But the biggest sort of, I came back and I said this, I felt like a hammer hit my head, because I've spent, since I was 13 to then, I think it was roughly, I was 40, just before my 40th birthday. And when you would have asked me, Yoni, is it easy to make money? Are you a successful investor? I would sort of go around, right? I didn't still feel confident after a lot of years in the markets, right? From 13 to 40, building eToro, spending all of my career on capital markets. At that point, if you'd asked me, like, how confident you are on generating returns over the next 10 or 20 years, I always felt hard to say, I know I'm a good investor. And then I actually, after talking to him, and he was very consistent on saying, like, you can make money in capital markets, no disclaimers, nothing around it. Like, can you make money in capital? Of course you can make money in capital markets. To make money in capital markets, all you need to do is understand companies' businesses and understand how to read their financial reports. And the confidence of that understanding helped me understand the beautiful value also of our popular investor network, right? So we have great investors, here's two of them, and a lot of investors on the eToro platform who are successful in investing in the markets. But it takes a lot of time to actually build that confidence in yourself to say, I am a successful investor, and to trust somebody else when you look at his portfolio for maybe 10 years and say, here's a very successful investor, and because he was a successful investor for the past 10 years, I believe he's going to be a very successful investor also for the next 10 years. And the reason it was for me like a hammer hitting the head is because this is like, I've been building eToro exactly because of that, but it sort of strengthened significantly my belief in what we do and also in the value of the Popular Investor Network, because I realize now when you look at the Popular Investor Network, you're seeing popular investors with 10-year track record. How beautiful it's going to be in 10 years when you're going to see thousands of people generating double-digit returns for 15 years and 20 years. So that was like, it strengthened a lot my belief in what we do. And surprisingly, we were there to try and convince him about Bitcoin. And actually,
what did he say?
And he wasn't convinced. So we actually said on Bitcoin exactly the same things he says about gold. He basically said it's like, even if it's a commodity, and he said he's not certain, and you can actually say it's a commodity. He doesn't like investing in commodities because they don't generate value, right? So he believes that you need to invest money in companies because those companies generate value for their customers. They employ people, so they generate value for their employees. And he has a famous statement. He said something like this, but if you could actually buy like a ton of gold to fill a stadium, or buy Apple and Amazon, then come back in 10 years and ask yourself, what did Apple and Amazon do and what this ton of gold did, right? So one part created products, created revenues, created wealth for shareholder, for employee. And the other one is just the same stadium filled with gold. So that's his view on Bitcoin. And actually, I came back there with a huge belief in understanding the value of the markets, the stock markets, and that even if we see a significant devaluation eventually of currencies, which is why I believe also in Bitcoin, companies will still be companies, right? So even if currencies eventually transform from euros and dollars to something else, and Bitcoin continues to rise, people will still buy their McDonald's and Coca-Cola with Bitcoin.
Sure. So let's come to the Italian market. So we have this report that the Italian Supervision Authority, the Consob, publishes every year about the behavior of Italian households as for their investing in the market. So the interesting news is that about 40% of the people interviewed said that they are interested in online trading. So, which is a 50% increase from the previous report. So this is interesting. Obviously, it comes. The answer comes more from the youngest people. So, what do you think of this increase? And also, this is in Italy, but maybe you have knowledge of what is happening in the other European countries or all around the world.
So again, a big part of our success generally over the last, I'd say 5 years is this inflection point in the rise of Gen Y or retail investors around the world. I think more and more people, so a lot of times people ask sort of why are Europeans underinvested in the markets versus their US colleagues, right? So I think what we gradually are seeing is younger generations understand very, very well that they're better off investing in the markets than just keeping their money in the bank. And people understand better because of the internet, right? There's inevitable truth, right? You look at the last 50 years and you compare what you have done with your money, bonds, money in the bank versus S&P 500, then of course more and more people understand what happens to their money if they don't invest and what happens to their money if they compound returns over time. And I think simplicity is also a big part of that. So it used to be actually hard and expensive to set up a brokerage account. You had significant minimums. It took time. And then when you opened a trade, you had to pay 10 or 20 euro per trade. And you didn't have fractional shares. So it was actually complex to set up accounts and to manage portfolios. And I think simplicity sort of created a whole new generation of younger investors who can access the markets, who can now talk to their friends and say, I bought NVIDIA 3 years ago, or I'm invested in Apple. And I think the fact that the market has also been on a great run, despite everything happening in the world, I think that enabled more and more people to understand the importance of investing in the market, the value of investing in the market, and more people are now have experience in actually investing in the markets and seeing that it's not that hard eventually to invest in shares.
Okay, but one thing is the answer, and they say they are interested. Then we discover that just 1 in 5 of the interviewed people actually do online trading. So maybe the youngest are doing this part and not the other ones. So there is still a gap. What do you think of this, and how can we fill it?
I think the gap still exists, and I think it's all about market education and experience. So it's always, I'd say that people are afraid. A lot of people are afraid to make their first transaction. It's like jumping into the water. People sometimes are afraid to use their money because they think it's complex, it's intimidating. And generally, I always say that if you ask in the US 10 people a very simple question, can you make money in capital markets? 10 out of 10 will say yes. If you ask this in many European countries, you'll have only 5 saying yes, and the rest would say, I don't know, it's risky. So I think it's building that confidence, creating more tools for financial education, platforms like eToro, which enable both ease of use as well as a lot of content and education, and the ability to actually see other people and see their performance over time builds people confidence that it's not that hard and it's all about learning how to invest and managing it over time. So I think that gap gradually closes down with younger generations setting up accounts and learning how to trade and invest in a young age.
And how do you help people who are opening accounts with you to be educated?
So first of all, a big part of eToro is we are the largest social investment network where you can actually see people's track records, where you can actually talk to them and ask them questions, and you can automatically copy the most successful investors on the platform. And I always say the biggest part of the social investment network is not only the fact that you can automatically copy people. So you don't have to be an expert, you can actually see a popular investor on eToro and say, I want to copy this person with $200, it'll copy their entire portfolio into your portfolio, and every time they trade, it'll automatically trade in your account at the same time, and you'll basically track their performance over time, which is a very unique part of eToro. But also, you can see thousands of people you can find. So an Italian can find somebody that looks like him, talk to them, and see their track record over time. And the fact that we have, out of 3.2 million brokerage accounts, we have 3,200 popular investors on the network who you can copy, you can ask questions, and you can see their track record over time. And their profiles are people from the same countries, and they can see that they've generated double-digit returns over a long period of time. I think that helps people educate themselves about the markets, right? So the fact that you can experience, I always believed that you educate yourself through experience and through observing others, right? That's how we learn how to talk and walk. And then in addition to that, we've been investing a lot in the eToro Academy. So we have thousands of webinars and courses to our customers to actually sort of deep dive and learn more about capital markets, about investing, and about trading.
So three flows now. So the copying the best traders. So maybe you can tell me, how do you select these best traders? Then social networks, so they speak together, and then the academy.
Exactly.
Okay. How do you find these best traders in the world?
So, we try to give tools eventually to our customers to make their own decisions. I think now we're actually building very interesting tools around AI, but they're not launched yet, to even help more.
Tell us later.
We can tell you later. But we've built basically around copying others a lot of tools to help people find the right people for them. So first, we understand and we know about our customers, their interest. What are they looking for in the markets, whether they're looking for stocks or whether they're interested in a specific market. And then when they go and look at our popular investors, they have a vast amount of information, and we basically try to match them with the right people to copy. And it's not, again, in theory, you need to actually invest and copy in people who are different than you. So you diversify your portfolio. You definitely, what we see is the most relevant part is actually a lot of our customers look at performance over time, but they look at performance, they look at how many people are copying a specific popular investor, and they're looking at their portfolio allocation, right? So it's a lot about trust and a lot about finding people who you appreciate their performance over time and what they're doing over time.
Thank you. Now we move to another level. Two issues. The first one is the relationship between you as a fintech platform and the traditional financial institutions. I think that there is a collaboration because you provide the platform to some of the major banks. Maybe you can tell us something about this kind of relationship. And on the other side, there are technology and the new technology, so blockchain, AI, and blah, blah, blah. And so everybody knows that they are very helpful, but there are discussions everywhere in the world about the possible risks. And so we need to deal with them, and the supervision authorities are always speaking about how to adjust now the law and regulations to this new world. So just an idea also from on this issue.
So first of all, I think, by the way, the two questions are very much related. So I'm not a big fan of banks. And mostly because, you know, from the get-go, 17 years ago, or maybe even more, when I look, and even now, right? So when I look at their platforms, I just think most banks, maybe some banks are different, but most banks, user experience is horrible. They don't really appreciate the difference between a feature and the user experience of a person using that feature, right? So you look at a platform.
Come back to the design.
It comes back to user experience, to understand how technology eventually simplifies. But what they understand very, very well is building infrastructure, scale, and risk management, right? So we do learn a lot from banks, and we obviously work a lot with traditional banks on the back end, right? So I always, when I look at sort of our two biggest line items in eToro's financials, it's usually like a Google, Facebook on one side of expenses, and then on the other hand, a Goldman Sachs and a JP Morgan, right? So when we have $12 billion of customer assets. Most of the cash of our clients sits with the largest banks in the world, right? We distribute it. So by definition, a big part of our services is actually connecting on the back end to banks. And I think that will remain in the future as well. I think more banks will provide fintechs eventually access to the markets. In the past, I think a lot of, again, there's a question on how banks eventually compete on the customers themselves and how much do they want to become really a digital app versus being a boring bank. I hope they just continue to provide us on the back end and let us manage the customers. So I think that's the relationship I envision. We've partnered with banks several times also on the front end, but I think it's always a challenge for them because it's cannibalizing their business. And it's also the reason, like if you think of a bank, and I think a lot of the reasons like there's a lot of regulation in banks, like banks still prefer for you just to put your money in the bank and for that money to do nothing, because that's how they would make the maximum amount potentially of money, and then for you to take loans from the bank, right? Where we believe people should actually invest all of their money in the markets and shouldn't have almost any money just sitting in the bank, because we believe in the markets and that people need to deploy their investments. And traditionally, that's not where banks come from. And I think the other part is when you look, and today we have about 1,500 employees in eToro, and we constantly see new technologies, right? So some of our investors actually told us that one of the great things about eToro from 2007 is our ability to constantly look at new technologies and adopt them both internally and externally. So when I started eToro, it was actually like a big server, physical server sitting in my parents' garage, connected to the internet. And when I raised the initial funds to eToro, I would actually connect via the internet to my parents and show an app connecting like to quote stream from there. Cloud didn't exist. It was a download application. Active web, dynamic web didn't exist. And then Web 2 came along, and with it, I'd say the birth of eToro today, which is the social investment network, because the internet moved from something technical to provide quotes to an active platform where people can actually talk to one another, see one another. This was like 2009, 2010. Bitcoin then arrived and changed for us the trajectory a bit, because I do believe very much in blockchain technology. And then mobile, and we became a mobile company. And I think now the two most interesting technologies are AI and blockchain. It's not necessarily related to what are the most interesting companies to invest in, right? So these are technologies. And I think a big question for a lot of companies, but that we ask ourselves and deal a lot is, what does it mean if in 2015 we had to sit in a room and ask, what does it mean for us to to become mobile first company, and with the crypto across 2017 and 2020, what does it mean to be a digital asset native company or a crypto native company? I think a big question is what does it mean to be an AI first company, and how fast can we implement AI in our business? And I think that differentiates startups and specifically eToro from banks, because we're able to look at things that change the market and say, we have to take this technology and embed it in our platform and in what we do, because that's our competitive advantage. And that includes sometimes taking risks, and taking those risks would in some cases differentiates between startups and traditional banks. And it's jumping into new categories.
Yes, okay, this is taking a risk from your part. The other issue is are risks for the people who are investing, no? Due to blockchain, due to AI, and then the issue on the table of the authority, supervisory authority. So do you deal with the authorities? Maybe you are asked to study with them some solutions.
So obviously we monitor everything as a regulated that regards compliance very, very highly. We have a lot of investments in what we call RegTech. So my deputy CEO at eToro, Hedva, was actually the regulator of banks before joining eToro. So we do a lot of work with regulators to, again, educate the market about the importance of technology, and how that technology can enable eventually consumers better access into the markets. So I think, again, this is my view, that regulators eventually and companies have a very, very aligned, or good companies, or in eToro, very aligned goals. We want our customers to have better experience, better access to the markets, better tools to enable them to generate returns, and the happier our clients are, the happier we are, because they can grow with us. And I think generally that's always also what the regulator wants. And our business, which is different from the regulator, is to educate people on how to take risk management. Investing is risk management, right? It's all about taking those risks, and using technology by definition is for investing, is tools for managing that risk. So it's a lot about market education, but there's like a very known quote in the, let's call it the Silicon Valley part of the world, or Israel, which is the biggest risk you can do as an entrepreneur is not take risk at all. So we have to understand that these tools are inevitable, like digital assets inevitable. We're sitting here in the exchange. I think it's inevitable that eventually stocks trade 24/7. It's actually crazy that crypto and blockchain assets trade 24/7 and very easily all around the world, and still local exchanges trade only on local hours, and it's hard to access them across the globe, right? So I think it's inevitable that this technology, what we see in blockchain technology is how the markets should actually operate, right? You should be able to buy stocks for Italian shares or UK shares from every place in the world through technology 24/7 in a very easy way from a technology point of view, I think. And of course, bond trading and real estate. So I think it's an inevitable future, which means when it's an inevitable future, companies should understand how to adopt those technologies, and regulators have to understand how to monitor and govern these technologies. And again, the biggest risk eventually in blockchain assets and sort of crypto is more related to anti-money laundering, which is a significant risk. I think AI, it is inevitable that AI will eventually know how to do research, pick stocks, and help people understand better how to manage their investments. So I think everybody understands it's investing is eventually also allocating time, your own time, right? And I think the combination of AI and smart people using these tools is inevitable. But there's no doubt, like we see it, I even see it, like I'm getting always closer to using these tools now. Suddenly I can do things that I couldn't because I didn't have time, because building stuff took me too much time, so I hired people to do it. Suddenly I can actually start coding again because it just takes much less time to create ideas. So I think it's inevitable. AI eventually becomes a significant tool for any investor, asset allocator, stock picker, and we have to bring those tools to our popular investors, to our customers, and we have to educate and help regulators understand how we manage the risks in that space. Having said both of these, I'll just say that I do think there is one very, very big risk, which is the combination of AI or AGI and blockchain. And because if AGI does happen, and by the way, it took me a while, I thought people were crazy talking about this 5-6 years ago, but I think that's where regulators really need to figure out. But blockchain assets basically enable, right? So when you think of computers trading, they will trade digital assets. But actually now a computer program can actually own also digital assets. So when I think like the big risks of AGI, if an AI actually knows how to trade better than us and knows how to manage money and create wealth better than us and can actually hold digital assets, that becomes something that is potentially a very big risk.
So you say that they can open their own accounts without...
I say that's a possibility for us to see actually entities like DAOs, right? So part of blockchain technology was thinking about like what does it mean to be autonomous organization? And those are very like big existential risks. The others are just about helping companies like eToro provide better tools through AI for people to learn. I'll give you an example of a product we're working on right now. We look at a person's portfolio, their track record, then we do like combinations, like thousands of combinations of picking 3 PIs, looking at historically what would be the best choice of 3 PIs from the point of view of improving their Sharpe ratio, so the risk management and performance over time. And we tell them based on thousands of combinations and allocation and asset allocation strategies of these 3 PIs and what you did in your portfolio, this would improve your performance over time and your risk of the portfolio over time. And that's an example of how you can use AI. And again, doing these calculations would take us 3 years ago, maybe like, days, and you couldn't do it. Now it takes minutes and you can provide it to every customer.
But it's quite interesting, and you have a lot to do in the next few years, and the supervisory authority is too. So I don't know. We have been very, very fast at the end. If there is a question from the public, we can take it. Or no questions. Or otherwise, I'll tell you that. Okay, we have recorded obviously the no, here. Here we have one, but we need to give him a microphone. Is there? Okay.
Hello everyone, Andrea Diana, Monitorio and Ruolo for my fellow colleagues. And I just wanted to ask how you in Asia invest today, and what kind of investor has been in the latest 20 years. We know that nowadays notable investors, you mentioned Warren Buffett, have pulled out from notable investments such as Apple, other investments.
So how do I personally invest? So first of all, actually, I'm an extremely diverse. First, it's public, so everybody can actually go to my portfolio on eToro and see how I invest. But I always say it's very, like when people look at my portfolio, it looks like a very messy portfolio because I love building the technology in eToro for me to like invest. So I copy 100 popular investors on eToro. I invest in 40 different, I think, smart portfolios in eToro. I invest in crypto personally and in tech stocks. So I'm a good investor of long very long industry changes. So usually in technology, I think crypto was a part of that. So that's sort of personally my expertise. And then I very much believe in diversification and relying also on the talent of others, which is why we've built the tools of copy trading and smart portfolios. So I've actually seen that. So I don't have like Warren Buffett as a value investor, and then at some point, if you think of LVMH or Bernard Arnault, they're actually fashion investors, right? The LVMH stock is investing in fashion, and you have different type of investors who have very unique strategies. Actually, my view is I believe that all of these strategies, each of them have merit on their own. My ability to invest and to find those different strategies is on eToro by looking at what other people are doing and actually copying them. And then personally, I'm long the market. So I believe in capital markets. I do believe in specifically looking at companies that I understand their business, their financials, and don't really care about going in and out of the stock. So I'm more of an investor than a trader, although I do trade from time to time if you look at my portfolio. And I would say my biggest concern, long-term concern about the markets, which I'm trying to hedge also, is I'd say the global economy and the dominance eventually of capital markets is a very US-based and US-led world for the past 75 years, and what happens in that shift and how much do you want to hedge that exposure. And again, it's why I consult and talk to a lot of our popular investors to get their view and gradually actually diversify my investments from only my own strategy into the markets to more people's views into the markets.
Another one there.
So that's another part of how we use AI. So first of all, again, I believe that this data, first and foremost, should serve our customers, right? So we have always looked at this data. And by the way, it's like two pillars of data, which are both basically public. One is the dialogues and the connectivity, right? So you can actually see what people are talking about the markets, analyzing the markets, but you can actually see also their social graph. So how many people are and who are copying here, Hepe or Louise is also data, right? It's social data about, and the trading data. So when you look at the trading data, it's super interesting because you can see people, retail investors, and their behavior. And at the size and scale of eToro, what's interesting is, and we've done some research also with universities on it, is that actually the retail investors on eToro, because of our size in Europe, actually reflect retail investor behavior, period, in the continent of Europe, right? So when you think of retail behavior and how retail behavior potentially impacts the markets, our data actually is a very good proxy to that. And we started now using and building models. So we just recently built an alpha team and brought in a chief alpha officer to actually use AI ourselves to generate smart portfolios that are actually long, short, smart portfolios, sort of not only market neutral, but also strategies to generate alpha in the markets in smart portfolio that will be offered to our customers. We hope to actually launch the first one, I think, in Q4. So again, my view is we need to use the data to generate eventually sophisticated investment strategies that we couldn't have done without AI 2-3 years ago, and put them on our platform and generate access eventually to retail investors to strategies that are not today accessible to retail investors, like market neutral strategies, long short strategies, behavioral economic strategies of sort of looking at which again, the largest funds in the world make money from this, right? The Citadels of the world, that's a lot of their business. Now with AI, a company like eToro can actually get into that business and use our own strategy of putting those returns to our customers, providing these smart portfolios to our customers to actually generate, again, better value to our customers.
It's caring for that funds. So
I'm telling you the secrets of the product features of eToro.
Okay, let's see. Okay, that's enough. So really, thank you very much for this interesting chat. And okay, we have recorded the chat, so it will be on the eToro platform, also on BB's, so you can see it again. And so thank you very much again, you and Borsa Italiana, and I hope to see you again in Milan next time you come.
Thank you very much.
Ciao,
Always great to be in Milan, and thank you to Borsa Italiana.